Right. Thanks, Harshad, for joining in with that. So that's an acquisition of a refactory of Dalmia Parent. We're going to shift gears now, literally, and talk about Forgings. This is a stock that has given investors nearly 19% returns year to date. It's also given a guidance of what? Ending this year with 1,400 crore rupees of top line. What happens next? Markets always look forward, right? So 19% returns for the year so far. Let's talk about what we can expect going forward with the Vice Chairman and Managing Directors, Mr. Vidyashankar Krishnan, here with us on the channel. Thank you so much for your time. So like I said, you've already provided us a guidance of 1,400 crore rupees. I think 860 crores odd is already in the bag if you were to go by the earnings so far. Markets want to know about margins as well. With commodity prices coming down, freight costs also coming down, shipping costs worldwide coming down, should investors start looking forward to Forgings improving the margin performance?
I would say that the bag is still mixed. Margins definitely are, as you said, have a positive bias. There's absolutely no doubt about it. But there are some headwinds too, by way of the export duty on steel having been removed. We could see domestic steel prices being a little bit firmer. And we also have to contend with inflation across the board, across various commodities and consumption items like consumables, oils, etc. So all told together, I would say it's a mixed bag, but definitely things aren't as grim as they were 2-3 months back on the margin front.
Okay, so I think you are in that wait and watch mode. A lot of the corporates are saying that. But the fact still is, and you brought up steel, and how are you going to watch for that? 80% of your cost, I think, is incurred. If our research is right, 80% of the cost is actually incurred, for forging steel. You're saying you're not sure yet how it's going to happen, but I'm sure over the weekend you must have already gotten in touch with vendors, with companies, and got a sense of what really is going on, because internationally the prices are still low. The sense we are getting, and we've been speaking to managements, is that because of that price being low internationally, domestically there may be no upside as such either.
Yeah, I would agree with you largely that steel prices should be headed south. But in India, it's a kind of a quirky phenomena. Steel prices are dependent on coal largely. By and large, coal determines the price of steel in India. Imported coal. Sadly, we have so much of coal reserves, but negligible portion of it is used for alloy steel making at least. So again, the other side is that this alloy steel is a different beast altogether within the steel spectrum. So overall, if the coal prices abroad internationally continue to be soft, I think we could see much better steel prices within India.
Okay. Also wanted to understand what is happening with demand, because your domestic business accounted for about 30% of your overall revenue. But now, as we understand, it's currently at 50% for FY22. With global headwinds and Indian markets expected to outperform, do you see the India share inching up forward? And where is it that you have the visibility or the marker for the next 3 years?
Here again, is a very good question. I would say that India is much better poised than the rest of the world. We are, again, the demography of the country is in our favor. We are a young country, raring to go. We have not pumped in money during the pandemic. So we don't have homegrown inflation. We have imported inflation. And thankfully, the government is also trying to control that with smart deals on the energy front. So India is said to be, with the talk across social media and mainstream media, everybody believes that the next 1.5-2 decades will be India's. Having said that, India should be leaders, and India should be nimble enough to focus on the business at hand and with a tight lid on costs, and move ahead and grab the opportunities that come in the global market. So India is definitely well poised over the next 10 to 15 years.
In India is the second largest in the world and just next to China. How is it that you see China plus one shaping for the forging industry? And more importantly, with geographies you think we can open the doors to, considering we are bound to eat into China's share?
Yeah, before that, on the previous question, I think I wasn't fully there. One portion that I need to look at is the share of domestic business. This has inched up over the years from around 35% to today 52%. So we expect domestic sales to grow to around 65% in the next 24 months. There's a lot of focus on India from our side. Now coming to the China plus one strategy, yes, it holds a lot of promise for the Indian forging industry. We are seeing a lot of inquiries come our way. It will be a tough walk to match the Chinese in terms of pricing, particularly with steel prices in China being much lower than in India. So that will be a challenge, but I'm sure that we will all rise up to the occasion and take the challenges positively.
Krishnan, the Association of Indian Forging Industry had said that over the coming years, it's going to be EVs that will eliminate 60% of the forging and casting industry. What are your views on this, and how are you preparing the company to be EV ready?
What will be total in the two-wheeler space, and also on the four-wheeler space, I expect, or at least everybody expects a 20 to 30% penetration. So let's say 25%. Similarly, on the LCV segment as well, a 25% penetration is expected. HCV, M and HCV, mixed bag, as things stand now, about 5% max. So that's not going to be much. So summing up, two-wheelers will be total. Three-wheelers are already on their way. Definitely three-wheelers will also be total EV. There'll be a marginal portion of two-wheelers, it's recreational vehicles, which will largely be IC engine based. And we will have four-wheelers and LCVs at 25%. So what is going to happen is that light forgings are going to be under a lot of threat. That's going to be the way forward. And the heavier forgings will be spared the blushes over the decade. Beyond that is anybody's guess. Having said that, there is also one other technology that's coming up, and it's very positive, which I have been highlighting over the years, which is hydrogen internal combustion engine, or what I call as ICE stands for internal combustion engine. ICE is hydrogen internal combustion engine. Many OEs are now towards.
Seem to have lost that audio a bit, but Mr. Krishnan, nonetheless, gotten a deep insight into how the business is working and what the outlook is. Let's shift gears.